Alrighty, good morning everybody. It is Tuesday, November 2nd, 2021, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Now, real quickly, going into yesterday's market, looking very mixed, pretty much the same as it's looked for quite some time now, maybe even almost an entire month. And so coming into this morning, we never really got outside of the range of yesterday morning. And so I don't think we're going to have the most compelling argument for one way or the other once again until we can get out from the current previous daily range. Now we put an alert out yesterday afternoon, and we said if we look up to our daily chart, we actually have that turn in the market. So if you look down here, you can see that now we actually have this peak on RVI. Now we have the beginnings of what looks to be a potential bearish exhaustion pattern on the daily. However, what I said in the alert, which I sent out, I believe I said we need to wait for we have to see how tomorrow's candle closes. So this candle, which is now today's candle, we have to see how this closes, because if this RVI ends up continue and it closes up like that, we'll still have a straight line. But if it closes the way it looks right now, we'll actually have that peak from back on October 26th compared to this peak we made yesterday. And again, we would now have an actual bearish exhaustion pattern on the daily. So we'll have to watch today and see if that occurs. Now, the line in the sand, and I put that in the post last night, was 46.03. So in the overnight session, we were kind of watching to see if the bears could hold below that 03 level. Then that might be a confirmation that we were going to get a little bit of a follow through on this bearish exhaustion. But what ended up happening here is in the overnight session, they've kind of bounced around that 03 level and have been essentially holding above it now. So we're going to have to watch that. So let's go. I kind of jumped into that daily there. Let's take a look at the ultra high time frames real quick. This monthly chart, or quarterly chart, sorry, 3-month chart, looks very strong as usual. No signs of exhaustion up there. And then on our monthly, we have a very similar thing happening here, very similar to our daily situation. So we've got kind of this pullback, this push to higher highs now, and now this RVI pullback and is now at a slightly lower high on the market. So we're going to have to, again, the monthly takes even longer to get confirmation. And so really not enough here to hang our hats on. Now, if this was to end up making a turn here when the next monthly bar opens and we get an actual peak, then we would have this push to a lower high on RVI, a push to a higher high on price, and we would have that bearish exhaustion pattern on the monthly as well. The problem, as I've said, is it takes a long time to actually see this develop and close and get confirmation and actually see a peak, such that by the time you see it, the move could have already started. And so that's why we dialed down to our shorter time frames to see if we can get a clearer picture over there, actually get into the trade on those shorter time frames, and then if it continues to follow through, we'll then see the monthly, the higher time frames also close and agree with, whatever direction you're looking for. So on our weekly, again, I think the high time frames right now are just a total kind of mess. Outside of the quarterly, where there's absolutely no indication of exhaustion, when we get to our monthly, our weekly, and our daily, things are just a little bit messy and are unfortunately in kind of like a quote in progress situation where it's going to take a while before that in progress go ahead and closes and gives us the official. So the weekly is same thing. We push to higher highs now. We've got a lower high on RVI. So basically the same on the weekly as we saw on the monthly and on the daily here. So again, we spent time on the daily, same situation. Potentially, if this candle closes, the RVI closes down here, we will have the argument for some bearish exhaustion. So we're going to want to watch this. If the market cannot break, if price cannot get above yesterday's high, and essentially we hold somewhere around 03 or below that, then it's more than likely going to close in that like that. And so that's what we'll watch for today. Let's go down to some more actionable time frames. Now keep in mind, we are kind of in this Groundhog's Day situation where every morning we come in and the market inched a little bit higher either the day before or in the overnight session and gave us very clear bearish clues. However, on the pullbacks off the previous daily lows, overnight lows, we get the bullish continuation, and essentially that's what we see. However, this morning, not the strongest bullish continuation pattern off yesterday's low. However, from the low from the day before, still there. So everything essentially looks the same. On the 4 hour, we're getting, again, kind of very into these tighter ranges. Excuse me. And so right now, really not too much to interpret with RVI right in this area. Essentially, we have to get through the previous daily high to negate the bearish signals. And if the bearish signals are going to win out over the bulls here, then we'll see a pullback to break the previous daily low and get outside of this range. And you notice where we found some pretty good resistance in the market, right around this 88. So we made the high around 88 on October 26th, got that pullback, came right back up to around 88, or I think it was like this was 90 and this was 89.75 or something like that, and then got a pullback again. So that area right around 89.90, notice where we bounced yesterday, just a few points below that, came right down and tested. So in the most ideal bullish case, they'll hold that strong resistance level in the market around 90 and go ahead and continue to chug higher. So if that breaks, that opens up room for more downside. So let's go to our 60-minute. Again, I don't think that we're going to get anything clear as we dial down. Essentially, we just get confirmation of the bearish case off the highs, bullish case off the previous daily low when we actually get to the 60-minute. And then again, in this little tight range, it's very choppy. Don't want to read too much into divergences in this local area here on short time frames, because it's not necessarily going to help with the overall picture. So right now, the 60-minute, again, bullish off the lows, bearish off the highs, just like we're going to see on all the other time frames. And in this local area right now, I think you could probably make the argument that from the high we made yesterday compared to the high we just made in the overnight session, there is a little bit of a bearish divergence argument. So we'll see if there's any type of follow through with that, and we'll jump down to the intermediate and see if we get agreement with what we're seeing there. Again, decent bullish divergences off the double bottom we got yesterday, bearish arguments off the highs from yesterday, stuck in this tight range, and right now a little bit of that bearish argument from the current overnight high on the 30-minute as well. And then, of course, the bullish off the overnight low. Let me go back to my 60-minute really quickly here. Just want to see this overnight low that we made. You know, it's not really a divergence on the 60, but we do see it on the 30. And let's take a look at the 10 here. And yeah, the 10 as well. It didn't get marked, but we got a nice 10. So there are some intermediate bullish signals from the overnight low. It led to this push from 93 up to just about 46.10 here for whatever that is, just about a 16, 17 point push. And now we have some bearish arguments from the overnight high. So as you guys can see, we're stuck in this situation. There's a little bit of maybe this triangle kind of thing going on here in the market. We want to get above the overnight high and above the previous daily high for any type of confidence in a bullish push. We do have a lot of kind of weight behind us from the bullish side here, where again, the pullbacks lead to continuations to the upside. So that's what we would expect until this all starts to fall apart. So for now, remember with trading, things work until they don't work, and right now buying the pullbacks, expecting a push to at least test the previous high, if not push to new all-time highs, is what we've been doing for a while. So we'll continue to kind of go with that, but keep in mind we have to get through the overnight high, the previous daily high. If we can't, and we get below 03 and then get below the overnight low, then it's looking like, assuming we can get through the previous daily low, a little bit more of a deeper correction. But again, it's basically a crapshoot here. Maybe slightly more weight on the bullish side because that's just what's been working for literally basically an entire month. So we're just going to have to take it as it comes this morning. And we'll leave it at there for our YouTube viewers, and we're going to jump over, get our eye levels on the charts here on our shorter time frames, and start looking for some potential trades this morning. Yesterday really couldn't have worked out any better. We caught a number of moves and called out a decent long that followed through for 6 or 7 points, a level that we actually mentioned we're just going to go ahead and throw a limit order on the market and see if we get follow through, and it did actually get a really nice reaction. And then we got a nice, a short right out of the open. We shorted the market, so we were able to ride this guy down, and then again take it long off of really good support level, and then I believe took it short once again. So pretty good morning yesterday. So for all those out there on YouTube, have a great rest of your day, and we'll see you there tomorrow.